Buona giornata and welcome back to the Global Business Channel, guys. Thank you for joining us today. In this video, we will discuss share certificates for companies, also known as stock certificates in various regions worldwide. Firstly, we'll provide a definition of share certificates. Secondly, we'll delve into their significance and understanding. Thirdly, we'll explore the historical context of share certificates prior to electronic record keeping. Fourthly, we'll address some common questions surrounding them. And finally, we'll examine share certificates within the framework of company law. Every Saturday and Sunday, we release videos covering topics related to the offshore global business, corporate, financial, and compliance sectors. We encourage you to subscribe to the channel and give this video a thumbs up if these topics are of interest to you. Without further ado, let's dive into today's video. A share or stock certificate serves as a tangible document representing an individual shareholder's ownership stake in a company, whether private or public. It contains essential details such as the number of shares owned, purchase date, identification number, typically a corporate seal, and signatures of either directors or the secretary. These certificates are typically larger than standard paper and often feature intricate designs aimed at deterring fraudulent reproduction and counterfeiting, issues prevalent in the pre-internet era of stock investing. For over 400 years, participating in an initial public offering, otherwise known as an IPO, or purchasing stock commonly involved receiving one of these physical stock certificates. The inaugural certificate was issued in the year 1606 by the Dutch East India Trading Company, valued at the time at 150 Dutch guilders. Fun history fact for you all right here. Stock certificates serve as the cornerstone of nearly every investment portfolio, representing partial ownership in a company. Typically, ownership records are maintained electronically, though individuals can opt for a paper version upon request. Each share certificate initially follows a standard design, which may evolve over time depending on each company and general trends. Presently, securities are predominantly recorded electronically through a method known as book entry form. This electronic approach eliminates the necessity of issuing paper certificates to denote ownership. With book entry recording, the physical transfer of ownership does not occur when securities are exchanged. Instead, accounting entries are simply adjusted in the books of commercial financial institutions where investors hold accounts. This system offers the advantages of modern electronic record keeping. Before the advent of electronic record keeping, stock or share certificates possessed a distinct charm of their own. It was quite common to receive intricately designed certificates adorned with elaborate engravings, akin to works of art in their own right. Here's an interesting tidbit. The Walt Disney Company issued its final paper stock certificates in 2013. Before this, the Walt Disney Corporation would customize their certificates with vibrant illustrations featuring their beloved characters. Consequently, parents often framed these certificates and displayed them in their children's room. In a way, the elaborate designs seen in many earlier stock certificates embodied what we now recognize as branding. Today, you might encounter reproductions of vintage stock certificates adorning the walls of your local financial advisor's office. Let's address some common inquiries frequently encountered online, beginning with the value of share certificates. Are they valuable? Yes, share certificates indeed hold value. If a share certificate pertains to an active company, it signifies ownership in that particular company. The worth of the stock certificate aligns with the share price of the company. Even old stock certificates from defunct companies may retain value. These companies might have merged with or been acquired by another entity, resulting in a stock certificate representing ownership in the acquiring or successor company. However, the value may not necessarily match the current share price of the company. Is a stock certificate provided when you purchase stocks? In contemporary times, it's uncommon to receive a stock certificate upon buying stocks, especially for public companies. Instead, your broker will furnish you with portfolio account statements detailing the stocks you possess. Additionally, as a shareholder, you'll have access to certain company documents. However, it is still frequent in many jurisdictions, a case in point being Mauritius, for private companies to issue physical share certificates. And lastly, as a question, do stock or share certificates have an expiry date? Share certificates maintain their validity indefinitely. If you possess an old stock or share certificate from a company that remains operational, it still signifies ownership in that company. However, if the company no longer exists, the value of the stock certificate depends on its fate. In cases where the company merged with another entity, the stock certificate may hold value in a successor company. This, of course, depends on various terms and conditions upon a merger. Conversely, if the company ceased operations due to bankruptcy, the share certificate likely holds no value. In many jurisdictions, company laws contain specific provisions concerning share certificates. As you may already be aware, if you're a dedicated subscriber to the Global Business Channel, I operate and work within the offshore global business sector in Mauritius. For this segment, we'll look at sections 97 and 98 of the Mauritius Companies Act 2001, which outline the regulations pertaining to share certificates for both private and public companies. You may take a moment to pause the video concerning the Companies Act sections applicable to share certificates. I will now briefly go over them. Section 97 concerns share certificates. This provision outlines the requirements regarding the issuance of share certificates by public companies. Within 28 days of issuing or transferring shares, a public company must provide a share certificate to each shareholder, specifying the company's name, class of shares, and the number of shares held. However, this requirement does not apply to companies using a central depository system for share deposits. Shareholders can request certificates for their shares, and upon receipt of such requests, the company must issue certificates within 28 days. Share certificates must accompany transfer instruments for share registration unless evidence of loss or destruction is provided with indemnity. When shares are transferred, the existing share certificate must be cancelled and a new certificate issued only upon the transferee's request. This section does not apply to investment companies either during share issuance or transfer registration. Investment companies under the Companies Act 2001 are not investment holding entities, but rather collective investment schemes or investment funds, being closed or open-ended. Lastly, as per the Section 8 of the 14th Schedule of the Companies Act, Section 97 of the Act does not apply to an investment company holding a global business license, whether this concerns an issue or transfer of shares. Lastly, Section 98 of the Companies Act 2001 deals with the share certificates that are lost or destroyed. This provision outlines the procedure for obtaining a duplicate certificate or document of title for a lost or destroyed share or debenture. Upon application by the owner and payment of a specified fee, the company will issue a duplicate certificate. The application must be accompanied by a written undertaking to return the original if found. If the value of the shares or debentures exceeds 10,000 Mauritian rupees, the directors may require the applicant to provide adequate indemnity against potential loss resulting from the production of the original certificate. That's it for today's video on company shares and stock certificates. Thank you for sticking around until the end. Your support means a lot to us, and we hope you found the information, insights, and key points valuable. We'll continue to share informative content every weekend, so don't hesitate to return to the Global Business Channel for insightful videos on the offshore, global, and financial services sectors. Take care, stay safe, and I'll catch you in the next one. Arrivederci!